Welcome back to Rock Stock Channel. It is June 22nd, and I recently attended the Benchmark Giga USA event in Washington. I got to interview Iola Hughes, formerly of Rho Motion, and now with Benchmark Minerals, Ken Brinsden from Patriot Battery Metals, Ian Rodger from Jindalee Lithium, and Bill Willoughby from Century Lithium. Sentiment remains cautiously optimistic. Demand fundamentals are strong, particularly driven by energy storage and hybridization trends despite short-term market oversupply and policy uncertainties. The interviews highlighted improving technology and cost efficiency, alongside supportive U.S. government initiatives aimed at enhancing domestic lithium production and processing. With these insights in mind, I pose these questions to our viewers. How resilient do you think the lithium market is against ongoing geopolitical and legislative risks? What factors are you closely watching to signal a clear turn in sentiment and market conditions? Stay tuned as we continue to bring you detailed insights and updates from industry experts and thought leaders. Now for the interviews. All right, we're here with another previous Rockstock channel guest, Iola Hughes, Head of Research, Benchmark Minerals Intelligence, formerly of Rho Motion, but certainly the battery energy storage guru, and everybody's talking about like, okay, if you don't love EVs, energy storage is just looking fantastic. It's now like 20% of, I think, the overall lithium demand, but there's been a fair bit of uncertainty injected into the U.S. given the sausage that's currently being made in the U.S. Congress. So I don't want to go in too much into the weeds of the House reconciliation because now the Senate's going to reevaluate it. But just in general, what are you currently saying at this conference? What's the vibe here in D.C.? And optimistic, pessimistic?
Yeah. I'd say mixed consensus across the board. When it comes to the storage market right now, there's really two things on everyone's mind, I would say. Firstly, tariffs. Tariffs have been particularly high on battery storage, whereas EVs have faced, auto tariffs. Batteries for storage are facing, as high as 100 and getting up towards 200% in some occasions. So that's definitely been a big concern, especially given the Chinese reliance and LFP dominance in the storage market. The other big one being the proposed changes in the budget reconciliation bill, which would essentially remove some of the investment tax credits and early phase down, make it harder to achieve them, and then also the removal of some of the support on the manufacturing side as well. As you mentioned, things could obviously change in the Senate, but I think that level of uncertainty is definitely making everyone cautious in the market. What I would say is a kind of optimism on the flip side of that is that the fundamentals for storage are still very strong despite these potential changes coming through. When we look at how system prices declined, when we look at how energy density for systems has improved, when you're assessing the kind of total cost of ownership of a project, it's still a much better picture than it was a few years ago. Your battery's going to last 25 years instead of 10. Even if we do see policy removed, people are still going to be building batteries. Demand is going to be strong, but maybe not as strong as it would have been under the previous or current policy landscape.
What I'm hearing, or just analyzing, like this, let me say, Simon Moores was very famous for kind of articulating, he interviewed Senator Murkowski, who is actually an important vote in the Senate for this upcoming reconciliation bill, but like he coined this term kind of like battery arms race, and how that's really changed a lot, from Lisa Murkowski 10 years ago. She was just a voice in the wilderness, and now it's kind of like consensus that we need to focus on critical minerals, but there's not so much the focus on the battery arms race. It's not narrated as such in the United States, but there is very much an AI race in the United States. And as I'm seeing it, and everything that I'm reading, is that we need the electricity, or otherwise we're going to lose the AI arms race. And there's been a fair bit of talk about nuclear There's been a fair bit of talk about some like geothermal, obviously coal and other fossil fuels, natural gas, but I keep saying next year energy, the largest utility in the United States who has natural gas plants, who has nuclear plants, they are saying the fastest and cheapest way to get electrons and electricity, onto the grid is renewables plus storage. Mm-hmm. Storage is batteries, right? What do you think? What are you hearing? Like, is America at risk of losing the AI arms race if they don't support batteries?
I mean, yeah, you're right. It's definitely the fastest way to deploy, your energy generation right now. And when you look at, storage being deployed alongside data centers, there's really like three different approaches you can take. So you have your backup power. It's like your UPS, which traditionally has been met by diesel generators. Slightly harder to electrify that fully, but we're seeing interest there. You have your directly attached batteries, so a large site that they have solar and renewables on site. This one I'd say is like, there's a market for it, but it requires a lot of extra land space, so it can be an issue. But the biggest one and where we're seeing the greatest amount of demand is around direct PPAs. So, you build your data center where you have a good grid connection. Virginia is a very popular choice. And then you're purchasing a PPA, a renewables PPA from across the country. And that's what's kind of helping drive that demand is through that methodology. And so, yeah, we're going to see a lot more of that coming. And it comes down to that kind of fundamentals I've kind of mentioned before around, even with removal of the ITC, even with tariffs in place, because of that cost improvement and technological improvement we've seen of storage, we've gone from a 3 megawatt hour container to a 5 megawatt hour container to people working on 8, 10 megawatt hour, 20-foot containers. Suddenly your site energy density is so much higher. You're looking at reduced land costs, you're looking at the longer lifetimes. So all of these things kind of are holding the market in a good position despite, some of the changes that might on the surface have a negative impact.
Okay, sounds good. Iola Hughes, look forward to having you in a deeper dive sometime in the not too distant future, but I just wanted to get a little bit of snippet and some color here at this fantastic Giga USA conference. I've been here many times. I think the first time kind of 2018, and super well attended, and the vibe is not as positive as it's been in other times, but there's a lot of uncertainty here, but there's a lot of interest reflected by the high volume of people and the quality of the content, as always. All right, Thanks again.
Thanks, Howard.
All right, we're here with Ken Brinsden at Benchmark Giga USA in Washington, D.C. He's getting ready to present, I think, on a panel, but I always want to speak to Ken, not just about Patriot, but as a legend in the industry who has been through lots of cycles as the former CEO of Pilbara Minerals. We were discussing earlier that we are now in month 30 since the November 2022 top in lithium, and the last cycle, which topped, I guess, in the mid-20s in January of 2018, didn't bottom for 34 months. So we have 4 months more if history is to repeat itself again. And I've been hoping maybe there's a grand bargain, maybe there's, Tesla introduces a lower priced car and robo-taxis, and maybe the end of the last cycle also corresponded with the turning off of the Altura mine, which Pilbara ended up buying, and there is some talk or thought in the market that there should be some further supply cuts, possibly out of Western Australia. So, Ken, first and foremost, you're always a great, you have a lot of wisdom and optimism, for the space. What are you hearing, seeing? We're not hearing so much about Canada these days, but what do you have to say to keep us optimistic and also compare this downturn to the last downturn?
Yeah. It's a key question, isn't it, too, Howard? Thanks for being a part of it. And Yeah, I think if you were to imagine what's different this time around, back in the period sort of 2018, 2020, it was both a combination. The issue was on both sides of the equation, both supply and demand. China had withdrawn subsidy support from the industry. Clearly, China is a key motivator behind demand, and new supply had come to the market. That was part of the complication in the last cycle. But it's fair to say the industry has matured a fair bit since then. And now we're not so much talking about there being demand problem. In fact, I would argue the opposite. Actually, demand is really strong. It's just very North Asia centric. But the rhetoric in the West is that somehow, lithium demand is waning. I don't subscribe to that view. In fact, I would suggest we are likely underestimating demand. And a couple of key factors come to mind there. Firstly, the rise of stationary energy storage as a key part of the renewables rollout. A really powerful analogy is to think about the adoption of solar. I think that batteries follow solar, and solar has been year on year grossly underestimated in respect of its market penetration. My expectation is that stationary energy storage will continue to follow that theme, and today we are vastly underestimating that demand. A second key theme is the effect of hybridization. I think in Western markets, range anxiety is still a thing, and it's important to note that if people are going to buy hybrids, what's changing is the method of hybridization. There's a complete switch going on. Classic hybridization was all about wedging an electric motor and a battery between a conventional engine and the wheels. And it's a very complex and expensive piece of technology. Now that cells are universally cheaper, I think the reverse methodology, an EV with basically a petrol engine support, becomes the norm for hybridization. And that's important because the battery size in each hybrid is materially larger. Let's say 3 to 4 or 5 times the size. So I think that's another understated source of demand. Clearly supply is frustrating, and I understand that. But the demand is going to quickly catch up with the supply growth, and with that as a backdrop, I think we can be reasonably optimistic about price support and price appreciation. As to exactly when that happens, obviously really hard to determine, but the big picture of the thesis behind the industry, I think, is still intact.
You were referencing at the last bottom, that you as a supplier had to reduce production very significantly, and some of your customers were basically saying, don't send us a cargo. Do you think that's happening now, and from where?
Again, a really key distinction to the last cycle. In the last cycle, new production like that we introduced to the market from the Pilbara region of Western Australia, we were the avant-garde, of the industry. And it was China pushing back on us in respect of supply in a circumstance where the market was oversupplied. I think most people would agree the market is oversupplied today. But as far as I'm aware, there is no pushback on cargoes now from classic Western supply. So an obvious question to ask then is, if the market is oversupplied, where is it being pushed back? And I would contend that's from the lesser quality supply that's now in the market domestically in China, and I would suggest likely some of those sources in Africa. Why is that being pushed back in preference to the West? That's because it's lower quality supply, and I would argue universally higher cost.
Okay, so you talk about like African low quality supply, Chinese lepidolite, maybe some China brines. Do you have any line of sight like that their customers are saying don't send cargoes? Because the spodumene suppliers, they're taking those cargoes, whether it's Sigma, whether it's the new Covalent, Kathleen Valley, none of these, the prices are low and they're not making money, but they're not saying, don't sell us the material. So do you think, are they saying that from other places?
No, I think the simple answer is yes, that's exactly what's happening. If you If you truly believe the market is oversupplied, then somewhere in the supply base, there must be cargoes pushing back, because it's not logical to continue to build a stockpile. That's not really a thing in the lithium industry, I don't think. So if that's the case, I'm not aware of any Western supply being pushed back, then I think you can make some assumptions about where the view of quality supply, and I think that probably still typically runs primarily, as I said, there's always nuance around the outside, but primarily through classic Western supply, as compared to the novel sources of supply that China has generated to CDC growth in supply.
Okay. And now I just want to turn to like North American supply, because we are here in the US and there's a lot of change in politics and a lot of uncertainty, but you know, there was a whole Arkansas Smacko contingent, there was a Salton Sea contingent, there are a few sediment here. But like Canada, you know, had an election and Mark Carney was elected, and Trump never campaigned on being anti-Canada, but like his rhetoric earlier this year. So just like you've made a major discovery, you know, Patriot's a great asset, Q2 has made a discovery, but like they're within the lithium narrative, Quebec, Ontario just hasn't been as talked about, right? So if you could give us some perspective on that. Again, I think it's partly because of Trump and it's partly because of this election. But Carney, I think, made some comments about, you know, energy dominance out of Canada. I don't know if he was talking about only oil and gas, but what's your perspective on what's happening, you know, in Canada and the Canada hard rock story? We also haven't heard anything out of Rio with respect to their Quebec asset, but here we see them, you know, buying into Chile brine. You know, any thoughts on this as we conclude?
I'm trying to treat it all as noise, Howard, and I guess taking the view that in the end logic will prevail. Canada is a natural source of supply. The US markets, North American markets, and Western markets more broadly. I'd put Europe in that category, of course. Why is that so? The combination of what's being uncovered at Shagajuana is pretty incredible. Scale, grade, recovery characteristics, and its location. And then more recently, the effect of the other critical minerals that are present at the resource, so tantalum and now cesium, implies that our project commands attention. And I'm pretty confident that as we continue to de-risk the project, it's going to become obvious that it's one of the most important North American developments you could point to in support of growth in demand in Western markets. And in the end, I'm suggesting logic prevails as compared to some of the political rhetoric that's been shared in the last 6 months or so.
Sounds good. Thanks very much for the update, Ken. Always great to talk to you.
Pleasure, Al. Thank you.
All right, we're here with Ian Rodger of Jindalee, who has sponsored this Benchmark conference. We just saw a lithium panel. I think you may have presented. Did you present?
Yeah, I presented yesterday, yeah.
You presented yesterday. Okay, so what did you tell the audience, and what you know, is your sense of what's happening there? We've talked about sentiment being quite positive in that the Department of Energy made big loans to Lithium Americas, which made a final investment decision, and Ioneer, which also is getting $1 billion loan, and you're just across the border of Lithium Americas Thacker Pass. Your project is called McDermott,
Yep.
as is the McDermott called there. So anyway, just what's the vibe here for Jindalee, and generally you're from Australia and Perth, and your perspectives of this conference and what you're hearing and seeing of America?
Yeah, well, I think the vibe from the conference has been pretty positive. Clearly, the lithium market's still in a challenging position, but you know, the tailwinds for US projects are, I guess, really emerging. We're obviously added to the Fast 41 Transparency Project initiative as one of the first initial 10 projects. And so we've had a lot of meetings on the sidelines with the White House, with different government agencies, following up on our grant application as well. So we've had a lot of good dialogue with, you know, US government on the sidelines of this conference. I mean, the focus of our presentation was just really providing an update and just highlighting how big projects like McDermott that have the potential to produce chemicals in the US are key to achieving some of their national energy security goals. And so I think we've had pretty good reception despite the sort of headwinds in the market.
All right, Jindalee is a gigantic sediment resource, so just remind viewers how big it is, what's your market cap, what stage of development you're at, and we've had you on the program a couple of times through our Getting to Know You series, and we could flash up here some of the prior videos for those who want more information, but just give us a quick.
Yeah, it's one of the largest lithium resources in the US, 21.5 million tonnes of lithium carbonate equivalent. We just finished a PFS that outlines a very long life, large scale source of battery grade lithium carbonate. Our market cap's about $40 million. Even in this bear market, we're up 100% year to date. We're still very cheap compared to our sort of peers on every sort of metric, and so well, on the back of this, we're doing a lot more marketing to high net worth, contrarian type investors in the US, with a view that this sort of project offers a lot of upside.
Well, that's impressive. Lithium stock that's up to 100%. There's some other
off a low base.
Off a low base, sure. But another story that we've had on the program, Noah Lithium Brines, also is up year to date. So it's not all terrible out there, and again, yes, from a low base, but there are opportunities. People are bottom fishing, and you've had some progress with this Fast 41. The permitting. There's a lot of policies underway here in the U.S. which are supporting U.S. projects. Lithium and other critical minerals.
I think probably the key theme is that even with the discussion with the White House, is that there's a lot of intent to probably consolidate and work together in the different government agencies. Historically it's been a bit disparate. The loan programs office, the DoD, and really the intent of the new administration looks like they're trying to collate and try to make sure that they're doing all they can to usher through domestic mining and processing projects. So I'm hoping that'll mean more positive news for projects like ours and some of our peers in the US. So I think the net takeaway is really positive.
Sounds good. Thanks a lot, Ian. Great to see you in person after watching you through a screen for the past year or so. And to be continued.
Thanks. Cheers.
Okay, we're here with Bill Willoughby at the Benchmark Giga USA. We've been interviewing a few companies that we've had on Rockstock Channel before. I just checked, and it was only 6 weeks ago, Bill, that we had you on the program. So we'll flash up to some of our viewers to check out those longer forms. But what's happened since then at Century Lithium, and how are you finding this conference, sentiment in Washington? Just give us an update what you are doing and your overall sentiment.
Yeah, thanks, Howard. Thanks for being here. In the time since I last talked, we've been working towards compiling our data towards an updated feasibility study. We have been working on our permitting and doing some work towards bringing in a strategic partner for our project, looking at some alternatives on our plant site and where one of our components, the chloralkali plant, is going to be located. This has been a good conference to be at. There's lots of political interest here. We're trying to get clarity on how we move forward in the permitting process and what opportunities are available for accelerated permitting. Also on the financing side, there's different departments of the federal government here in Washington, D.C., and we're making contact with them.
Yeah, there's been a lot of movement on the permitting side, the Trump administration, executive orders, and even the Supreme Court, right? The deregulation. So hopefully it'll be a lot easier than some of your peers had, like Lithium Americas and Ioneer. But the reality is both of them did get permitted, and both of them also got big funding packages from the U.S. government, as well as strategic partners. So,
Right.
What are you looking? You said you're looking for strategic partners. Like, have you hired an investment bank for that? What is the timing? The nature of the partner. What do you think?
Yeah, we would like to be working with someone who's understands the chemical or lithium business, obviously, and that side of things. And then also someone who's got strengths in financing to bring a lot to the table. So far, the federal government has been the go-to party for Lithium Americas and Ioneer. Lithium Americas, of course, has GM as a partner on that. And we'll see where we develop in terms of that strategic coming to play. So.
Okay. And just remind me, you said the stage of development, you're at a definitive feasibility study yet, or just at PFS?
No, we're at a feasibility study. We completed that last year. We're doing an update to it to account for some optimization studies we did over the fall and bring that in. One of our components of the project is DLE, direct lithium extraction. We've done some upgrading on our process around that. Also on the precipitation part where we produce lithium carbonate, battery grade lithium carbonate at the tail end. And leaching component is all in hand, so we've made some changes around that. So yeah, we're working towards an update probably later this summer.
Okay, and Century Lithium trades on the Canadian Stock Exchange as well as the OTC. What's the ticker symbol and market cap?
It's LCE on the TSXV and CYDVF on the OTC. And our market cap's sitting about $50 million right now, Canadian.
50 million Canadian.
Yep.
Okay, sounds great. Bill, great to see you, and look forward to further progress and talking with you again in the coming months.
Great, thanks Howard.